speculators, after months of little bit of liquidation in the gold market where the speculators were taking profits and gold kind of just chopped sideways, they are returning with massive open interest rising again in the futures market. What open interest means is people are coming in to buy more open interest. They're buying more contracts, and prices breaking out again as we see it nearing 27 or 3,700. This is the normal link between purchasing and higher prices, okay? To your point. And you're the first person who I've talked to in a while that's got this.
No.
And that is that the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because you have record high lease rates, you have falling open interest, meaning the speculators the hedge funds aren't buying. You have massive delivery demands, 58 million ounces since late August, 10,550 tons year to date. This points to a shrinking physical liquidity and mounting pressure on the market in London. London shows that they're trading 600 million ounces of silver a day, representing between 1 and 2 billion paper ounces, claims 1 and 2 billion, and they have 140 million ounce free float backing that 1 to 2 billion claims and 600 million ounces a day. So it really means that London basically virtually has no free silver to meet rising investor demand or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more by short squeezing than by anything else. And silver is something called a Giffen good, or Giffen good means that as prices rise, demand increases. That's kind of abnormal in investing. But it makes shortages even worse, because as the price rises, you'll get the industrials that say, man, we need to just jump on this now, like Tesla, because we need, so much silver and the price keeps going. Let's just jump in.
Right. They got to lock it in as a hedge. Yeah.
Yes. And so, yeah, really, 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 really good question. And I would say gold's open interest is massive. That's the central bank. Silver open interest is falling a little bit, but the price keeps rising. That's a short squeeze. The big buyers are entering the market, including the U.S. government. And again, companies like Tesla, they're going to be forced to soon stockpile it too, because it is a strategic. Now, it's just something that I think the government acknowledges that we need for national security, whether it be for its military components, whether it be for its industrial applications in electronics and electrical. It's an asset that is depleting in nature. It is falling from what for 5,000 years was 16 to 1, and it is now 7 to 1. It's falling, but it is indispensable. It is needed in so many things that there really is no substitute for it. This is it's called inelastic, meaning that the price, the component of it is integral, but the price isn't as important. If you need a fifth of an ounce for a phone, it doesn't matter if the price goes to $300 an ounce. The phone will just cost a little bit more, but you need it. You compare it to what like a very elastic commodity would be. Think of like corn. Corn is very elastic because you can just plant more fields of it, right? Silver isn't, because it's depleting in nature. And I think that's really the understanding here, is that the government says, hey, in fact, the U.S. government, they have a branch of the government called the U.S. Geological Survey Department. Yeah. They came out a year or so ago and said that they believe that silver could be actually one of the first elements struck from the periodic table of elements as it's disappearing in nature. So I think that's what it means. It's critical to the safety and security, the future safety and security of the United States government. But countries like India and China have realized that a long time ago. This is why China, the second largest producer in the world, as I've been reporting for the last year, is flying all around Central America and all the way up to Mexico and buying doré and concentrate. Concentrate being a byproduct of the mining process, doré, a crudely refined bar before it's sent for full purification, buying it and sending it back, paying double what the West will, sending it back to China for refining. If they're the number 2 producer in the world, what the hell are they doing going out of their way to Central and South America to buy stuff that is not refined, pay double what the West will, pay to ship it back and then refine it? Because they understand it's strategic, it is critical. And in fact, this was something that the folks in Canada noticed last year. They petitioned the government to call silver a strategic critical mineral, not an industrial metal. And I don't know how that played out, but I know they were talking about it a year ago. The US was just late to catch on. It is this administration who understands the significance of these precious metals, not just for wealth, but for the greater picture in terms of not only monetary reasoning, but also like silver, which is one of the unique things about it. It's plurality in uses: monetary, industrial, strategic, military, etc. Critical. And what it really means, is my opinion, is that the floor has been put under the price of silver and gold by the US government. I really do believe that. And this is when you will see investor demand and industrial needs collide. The market will face, I think, that moment where there is a battle between the hedge funds and the industrials, which will massively add fuel to the fire, because the realization will be that that's exactly what is happening. And when you see the amount of silver coming in the first week of the September contract, as an example, we saw literally almost well over $2 billion worth of silver delivered into COMEX in just the first couple of days of this last week in the September contract. And again, what did I say? How much has come in so far this month? It was so far this month, the first week, because I didn't get the numbers yet for this week, 52 million ounces were delivered on COMEX of silver. So 52 times, your $2 billion right there. So that's just 1 week with 3 weeks worth of data left. This is every month. So someone or some entity with a whole heck of a lot of money is saying, yeah, we want the physical. We don't want your paper promises anymore for these reasons. Now, is it an industrial? Is it a government entity? Is it an investor? So is it someone that needs it, like Tesla or Panasonic or Sony or whatever? Or is it someone who says, you know what, we're going to stockpile this? See, the U.S. government got rid of its strategic stockpile ages ago, and they've always had to go into the open market to buy silver, even to make silver eagles. So I think it's a realization that in the end, it's about having the tools, as you mentioned, to further your society. China's realized that for a long time. They play the long game, and they've been buying this stuff stock. They've been producing gold and silver even when it was uneconomical for years, using their trade imbalance, because they understand in the end, he who has not just the gold and silver, but all of the things. That's why China bought the LME, the London Metals Exchange, all the base metals. They own it, and they're warehousing these metals. They're building warehouses all throughout China that store the metals on the LME. That's why the whole premise of the Belt Road Initiative is partnering with countries that are resource rich and underdeveloped. We will develop your country, we will build the infrastructure, we get a piece of what comes out of the ground, and now we're making it so you can go back and forth on not only on transactions using the bridge technology, which is being rolled out to them, which settles in 7 seconds outside of the SWIFT, at a 98% reduction in fees. You can settle imbalances in gold, or you can take your gold that you pull out of the ground all throughout Africa. You can put it into a vault that will soon be in all of the countries around the Belt Road as collateral for renminbi-based loans, like a repo. And so we are getting to a point where gold and silver and commodities are becoming far more important than the paper that has been used to purchase them and to value them for a very long time. The folks in other parts of the world see this clearly. The insiders here, I think, now see it. When will that trickle down to you and I and the rest of us? Don't know. I mean, people watching your show probably have a better idea, but the people who we call friends and family, who are very well read and very intelligent, arguably just read the wrong stuff. And they are being misled and misdirected with the public who's all in on margin, all in on leverage. on options and all in stocks as the insiders go this way and gobble up physical assets. It's classic misdirection. It's the art of war. They're winning. Thank God someone in this administration, in my estimation anyway, clued in this President Trump and this administration to the importance of getting on the bandwagon. The world is dumping U.S. Treasuries. There's far less demand for U.S. Treasuries, and the U.S. government wants to, in essence, it's almost like yield curve control. They want to hold the front end of the market low, interest rates, to finance the workings of the government, giving it synthetic demand by the purchase of these stable coins. It goes hand in hand with my bigger picture, and I'll try to do this in 1 minute, and that is you revalue gold. You let it go much higher first, and then revalue it to a level that massively devalues the dollar. That's what revaluation of gold is. It's to devalue the dollar. You peg it to the back end of the bond market so that you can have zero borrowing costs on your long-dated treasuries to bring back manufacturing. And with a massively devalued dollar, you can sell your products to the world. And in essence, it is a part of a process of defaulting on the world reserve standard. Not defaulting, period, but defaulting on us being the world reserve. It's something we can't do anymore if we want to have strong manufacturing. And we must have strong manufacturing. So you devalue the dollar, you peg gold to the back end, bring back manufacturing at zero borrowing costs up front, and then you sell your goods to the world at a massively devalued dollar. That's what it's all about. So if you're going to have zero borrowing costs, and it's going to be about gold, how do you finance the government? Well, you call it the Genius Act, and all of these stable coins will finance the government because they're all buying U.S. treasuries that no one else wants to buy. I think it's interesting. They call it stablecoin backed by U.S. debt. Not real stable, but a interesting plan to find demand for a diminishing demand vehicle that's critically important.